evening, depending on what part of the world you're from. Thank you so much for coming to today's live Tuesday, technical Tuesday session. But it's always great to be in front of you guys and just share with you guys what we feel may be taking place in the market, especially if you're trading the Euro USD and the US dollar Japanese yen currency pair. We're going to definitely talk about those two currency pairs for today and let you guys know what is our bias and what we expect to happen for this morning. But good morning, Paul, and good morning, Peter. Thank you guys for showing up. But with that said, I guess we can move forward and talk about what we expect to take place in the market, especially for these two pairs. Now, today is February 19th, 2019, and we're currently looking at the Euro USD, and we're looking at the 4-hour chart. And as you guys know, if you guys are part of our Telegram channel, if you guys are part of our free signaling room, we sent you guys a trade idea. Actually, that trade idea hit our stop loss. We moved up, we bounced up sharply and strongly for a good number of pips, all the way up to 1320. We had a take profit at 1344. We got in near the lows right around here. And as you guys can see, price ended up falling and sliding lower. We started seeing some US dollar strength. If you look at the Dixie, you can see that the Dixie started strengthening. For those that may not know, this is the US dollar index. But we saw the US dollar index rally, and that was the reason behind why we saw our particular trade idea, which was a buy, hit our stop loss for a small loss. Because remember, guys, we want to manage our risk. We don't want to bet everything on one single trade idea. We only want to bet a small amount of our total trading capital on one single trading idea, because that is how we keep the ship afloat. That's how we maintain our trading business, by using proper risk management and management. So then, does that affect me? No, absolutely not. It does not affect me at all, because it's just a small loss compared to more future winners that we should see in the market. But of course, we had a loss. Now, let me go back to the Euro USD and share with you exactly what I think is going to take place. Because do I think that trade idea, as far as buying the Euro USD, still holds? Or, are we still going to look for an opportunity to buy the Euro USD? Well, yes, we are. I think we're just seeing a deeper retracement in price before we see that nice push higher and a possible push to retest this trend line, this ascending trend line support of this bearish flag pattern or this ascending channel. Now, for those that may not know, let me go back to the weekly chart to share with you guys what's going on with this particular pair. And if you look at the weekly, and I know we talked about this a few weeks ago, but we clearly see that price has formed a bearish flag. This is a bearish flag pattern, and it's what you would call a bearish continuation pattern, which means that we should expect more further movement to the downside. Price should slide, and just like I mentioned in the previous live Technical Tuesday sessions, I mentioned that price could slide all the way down to $1.10. And this is where we could see price pause and hesitate before we see a nice retracement to the upside. So then I'm thinking we may see something like that. But this is the weekly chart, guys. And remember, price tends to grind its way down to certain levels. It doesn't move in a straight line. So then we want to look for opportunities to both sell and buy when those opportunities arise in the market. Just because we're assuming that price is going to slide all the way down to $1.10 does not mean that we won't be able to find buying opportunities along the way. And that's what we did on in the morning, early morning. I entered a buy, and it ended up stopping us out. So then let me just share with you guys what I feel may be taking place on this particular pair, because it's pretty apparent price, is consolidating, but I feel that price may fall and may test this area right here. Let me just draw it in for you right now. This is what I believe is going to happen. I believe that price may just fall and maybe test these lows down here before we see a nice push to the upside. You know, yeah, nice push or bounce to the upside. So then that's what I think may be taking place on this particular pair. You know, only time will tell. We just have to see what happens. But we could see something like that. Now, in the meanwhile, what should I be looking for? Well, let me just share with you what I'm looking for on a smaller time frame, and then show you how I'm going to look, you know, maybe re-engage this buy setup once everything meets my particular expectation. So then let's go down to the 1 hour chart, because I want to show you guys something on the 1 hour chart. All right, so then right now we're on the 1 hour chart of the Euro USD currency pair. And let me ask you guys a quick question. For those that are familiar, let me just draw this in for you. What pattern do we see right here? What is this called? What is this called for those that may know? This is yet a classical chart pattern. Yep. Okay. So Paul commented, he said it's a head and shoulders pattern. And yes, that's exactly what we see. And typically when you see these type of patterns, you can expect a possible shorting opportunity to the downside. So then what we may see is something like this. Let me just share with you guys what we could potentially see. We could see price push higher up into this area right here. You know, it could correct a little bit higher. And then from there, we could see price slide a little bit lower and retest this area right here, or where this line is. This is what I think could be taking place for this particular pair. Where's that line? That number? Now, you know, as you guys know, this line is at 1269, but what you have to understand is that it's a zone and it's an area that we're identifying. It's a zone or it's an area of support that could be respected in this pair, because let me just share with you also something else on the 4 hour chart. If we see this take place on a 4 hour chart, this, you know, price pushing lower right here, then it could form what could potentially also be a larger inverted head and shoulders type setup. Because if price does respect this area, then we could potentially see price push higher, and there'll be a nice bullish rotation in price. And that is what I'm expecting for this pair. I'm expecting the Euro USD to at least maybe test these lows down here, and then for us to see that bullish rotation in price take place. But if we're going to trade this to the downside, if we're going to trade this correction to the downside, then what I would recommend is that you target the lows right here. So then don't try to overshoot the targets. Target the lows, because I feel that we may get some sort of double bottom to form on the 1 hour chart before we see a nice impulsive move to the upside. So then that's what I'm expecting, is something like that to happen, for price to push up into this area, then for the sellers to come in, push this a little bit lower. You could close out our trade right around here, and then for that nice bullish move to the upside. All right. So yeah, I know Marvin's here, and he definitely wants to say something right now. Yeah, I was going to say good morning, everyone. Thank you guys for joining us for today's technical analysis Tuesday. But one thing I wanted to point out is that, like, when it comes to these trade forecasts, or even these you know, opinions or outlooks that we have, one thing I wanted to mention is that an outlook is not a decision to actually execute a trade. We have to wait for signs of confirmation and for technical signals to show or indicate that the trade is working out. Because really, if you look at things fundamentally, we're seeing more of a rotation out of the euro, primarily due to some softening and weakness in their economy. Some of you guys that have been following us for some time, or that are even a part of our lab trading community, would know that for some weeks we've been discussing some of the fundamental backdrop behind why we're seeing this euro weakness and this softening in the eurozone. And especially even considering today. Like I know, this is Technical Tuesday. We're not supposed to touch on fundamentals, but it's important to know the reasons behind why prices are moving the way they are. And primarily it's due to just some uncertainty regarding the possibility of steel tariffs or aluminum tariffs applied on European auto imports. Imports into the United States, that, there's talks of it being a national security risk. And that, since that's the case, according to Article 223, I think, there's justification behind the White House applying levies or tariffs on auto imports. But if they do this, then that would definitely suppress and exacerbate the recession or the softening of the European economy. So then this is the reason why we saw the move to the downside to these levels. So then if that continues on, if we don't see any type, or we see signs or hear President Trump mentioning that he's going to move forward with it, at the moment he has, I think, about 90 days to make a decision on what he wants to do. Like if he decides to actually move forward and impose these tariffs on auto imports, which would definitely impact Germany, then that's going to definitely affect their economic outlook. It's going to suppress their economy, and we should see the euro slide lower and even possibly break below these lows here, these yearly lows down here. So then, it all depends on what the headlines are saying, and what pretty much what central banks are deciding to do. But that's kind of what I wanted to introduce for a little bit, because we're giving you this setup that the euro is going to go higher, and technically speaking, we have a strong argument to believe that the euro may pop higher. However, anything is possible with the headlines, with the uncertainty surrounding trade negotiations. Anything is possible, and we don't know what could happen. Anything is possible, but then that gives us a fundamental reason behind why we saw this slide lower in price. And just like I said, what we want to do is first look for a selling opportunity on a pullback. We're not looking to buy yet. So we're waiting for this pullback, and then right when price gets into this area, what we're going to do is execute a short or a sell. Let me just place this right around this area right here. We're going to look to short, and we're only going to target the lows right here because, like I said, I feel that price may still, the bulls may try to still respect this and push this higher. That's just my assumption. But if we do see something like that, then what we would have to do is wait for bullish confirmation. And one thing that you can do, if you really want to wait and sit on your hands and not do anything until you see signs and clues of price pushing higher, you can just simply wait for price to break this trend line right here. Once price breaks this trend line, then you can look for your buying opportunity. That's if you want to play it more cautiously. But in the meanwhile, what we're doing right now, we're waiting for price to correct a little bit higher. And then right when we see bearish momentum in this area, then we want to execute our sell. And then we'll just target the lows right here. Where these candles are right here. We're just going to let that be our target. And if you want to, you can take partial profit here, because just like Marvin said, price could continue sliding and even pushing past this area. But it's up to you. It all depends on your style of trading. But then that's what we're looking forward to for the Euro USD pair. And if price does push higher, then we want to look for that bullish confirmation. You can wait for a break of this trend line. And if you get a break of this trend line, then you can trade this to the upside. All you have to do from there is just wait for price to correct and then trade this higher. So something like that. But are there any questions about the Euro USD before we move forward? This is just a quick brief overview of exactly what we're expecting to happen. But just like Marvin said, just because we have a forecast doesn't mean that our forecast is going to play out the way we think it's going to play out. Anything can happen, and that's why in trading you have to be fluid. You have to be able to adapt to the changing scenarios or the changing situations in the market. And if you're not willing to adapt, then you're going to find yourself oftentimes in the wrong side of a trade, and you're going to be frustrated. You're going to be frustrated about trading.
Right. Right. Yeah, I was gonna say, like one of the I guess keys to successful trading, you got to realize that it's sort of like if-then statements. Like if this happens, then we can expect this to happen, and that's how you have to approach your trading. That you have to come up with numerous scenarios on what could potentially happen, and you don't just rely on one opinion or forecast. Your forecast really, involves a series of if-then statements. Like if price breaks this resistance, then we can expect price to go here and do this. If price moves lower and breaks through support or bounces off support, then we can expect this. So then you can't have a rigid, how can I put it, stance or position on what you think price is going to do. It's just safe. It's just better and more preferable just to have a series of scenarios, in your tool belt in a sense, or even listed in your trading journal that can give you an idea of what could potentially happen, and you trade those particular scenarios.
Yeah. Yep, exactly. So then, that's how you should trade. Nothing's ever guaranteed or definite. But I hope this helped you guys out. This is for the Euro USD, and these are two different trading scenarios that could take place. We're first looking to sell, and then after that, we'll be looking for a potential or possible buy upon bullish confirmation. And in this case, for some, they may feel that they may have more bullish confirmation once price breaks above this trend line, this descending trend line resistance, which is possible. So with that said, I know what we're going to do next is go to our next currency pair. Let me first go to a higher time frame. Okay, so then next what we're going to do is go to the US dollar Japanese yen, and we're going to go to the 4-hour chart. Okay, so then right now we're at the US dollar Japanese yen, and you can clearly see that price pushed higher, and it pushed a little bit past our level at around 110.80 or 110.78. And it went to test this 111 psychological level.
Yeah, now I was gonna say that was our previous target, for the US dollar Japanese yen, for those of you that are new, on here.
Yeah. Like you would have to look at the past 2 or 3 technical Tuesday sessions to know exactly what we predicted. But pretty much in a nutshell, we predicted this 3-drive move to the upside. What we see is 3 equal measure moves from here. This is one move. This is the first drive. Then this is the second drive, which is an equal length or distance of this move. And then this is the third drive right here. So then we saw this 3-drive formation take place in the market. And whenever you see that, then you need to be prepared for a nice selling opportunity for price to expand lower and for there to be a nice bearish rotation in price. But you can clearly see that price pushed higher. It pushed beyond this level. And it actually hit the 111 institutional or banking level. This level of 111.00 is also considered a psychological level as well. But we see price hitting this banking level or this banking zone at 111. So then what we saw was the bears come in and push this price lower. But as you guys know, we're in the midst of a correction right now. And this is the reason why I did not enter my short. I know a few people from our premium group was wondering why I did not execute my short yet. And it's because I knew that this type of price action was going to take place. I knew that price was going to push lower, and then we were going to see a correction in price before we see, a continuation or fall or slide lower. And this is the trap that many traders find themselves in. If you go to the daily chart, let me take you to the daily. So right here, we're looking at the daily chart, and I'm just going to teach you guys something on this particular webinar right now. So then if you zoom into these candlesticks right here, right? A lot of people, they saw this strong bearish candlestick, and they pretty much assumed that, hey, this is our sign, this is it. We need to look for an opportunity to sell. They saw that strong bearish candlestick. But, you don't want to draw your conclusion off of that candlestick. Let me just teach you guys something right now. I'm going to teach you something called the lower, lower, and lower close. Oftentimes price will have to break and make a new lower low and lower close before you know that the bears are really taking control. And in this case, we did not get a close below the previous bullish daily candlestick. So then there was no reason to really look to go short yet, until we see a nice defined move to the upside. Now, what some traders do, to the downside. Now, what some traders do, they saw this candle right here during the middle of this candle formation, and then they assume that, hey, this is our sign, this is it, let me get in early. But sometimes getting in early may not be the best thing to do. But what we see right now is a nice, decent retracement in price, and price could push higher and even test these highs up here. We don't know. But what we want to see in this pair, if you go down to the 4-hour chart, is really a break of this area right here, of this structure low, before we know for certain that the bears are taking control and that we should see this pair slide lower. So then what I'm going to do is just draw in a small miniature zone in this area. Let me just I'll make this yellow, but right here, this zone right here, if we could see price break below this zone and close below it, then that's our clue that the bears are taking control. And the neat thing about this particular trade is that there's a possibility for us to see price slide all the way down to this area right here where this swing low is right here. Because that's one characteristic about the 3 drive pattern. Oftentimes you would see price test the last swing low of that 3 drive pattern. It would usually fall in this zone or this area right here. So then what I'm going to do is to draw another box right around this zone to sort of identify where price could slide to. So price could slide anywhere within this zone, once we get this bearish opportunity, once it's confirmed that we're seeing a nice bearish rotation. So then this is what we're going to do. We're going to wait for price to break this low, right? And if price breaks this low, then, what we can do is wait for a correction or pullback. And then from there, we can trade this down and we can have multiple targets. Like this could be like our target 1 where this congestion area is right here. This could be target 1. And then target 2 could be somewhere down here. But yeah, we can have 2 targets for that particular trade. So then let me, I'm just trying to rush through this, guys. But we can have a target 1 right here. And then our target 2s could be somewhere like right around here or something like that. That could be our target 2s at 108.90 or really 109, just to play it safe, around a 109 psychological level, just to play it safe.
Yeah. Yeah, but I was going to also add, it's just important to keep in mind that you would only adopt that particular trade bias if you see certain key structural levels violated and broken. So then, of course, right now we see the US dollar, Japanese yen trading higher, and primarily the reason for that was due to, optimism, renewed optimism over what appeared to be some type of progress with the US-China trade negotiations. So then, of course, over the weekend and just even last week when they was having the meetings in Beijing, we saw the US dollar versus Japanese yen prop up and rally higher on just good optimism and just risk appetite. So then, of course, we've been seeing a little bit of softness, come in, primarily due to some profit taking. There was need of some profit taking where a lot of the bulls wanted to cover their long positions, and now we're seeing this this push up to the upside. Now, some of this bounce to the upside is also fundamentally driven by the Bank of Japan, because recently they came out with some statements where the Bank of Japan Governor Kuroda came out with some statements mentioning that they were going to defend any further strengthening of the yen, that if they see signs of the yen strengthening, suppressing their economy, then they were going to move forward to actually expand stimulus and actually provide stimulus to help boost up the US dollar, Japanese yen, or weaken the yen, weaken the value of the yen. So then because really in this type of global economy where we're seeing all of this geopolitical uncertainty, the yen is the one that typically benefits and gains and strengthens on any signs of bad news or any type of concern or negativity, because it's a safe haven currency. Whenever there's fear in the market, you will just go into the yen, primarily because it has a very extremely low yield, and you can insulate yourself from a lot of risk that can come as a result of certain geopolitical uncertainties, even economic uncertainties that are out there. But the Bank of Japan mentioned that they're intent on defending or trying to prevent further strengthening of the yen. So then they're willing to actually provide stimulus and expand their balance sheet even more and do more asset purchases. So then that's what created this bounce that we see in the US dollar Japanese yen just for today on an intraday basis. But it doesn't mean that we won't see that topping take place. There's other factors behind why the US dollar Japanese yen moves the way it does. But it's important to follow stocks, follow the equities market, get an idea of what's happening on treasury yields, because the 10-year yield is closely correlated with movements in the US dollar Japanese yen. And as you look at those particular assets and do more of an intermarket analysis, that can give you a better idea of what could potentially take place. So then we may see this move lower if it breaks this structural low here, and if it does, then we can definitely prepare for an opportunity to short, and as the pair tries to maintain its range. And,
yeah. So then that's it for both the Euro USD and US dollar Japanese yen. Now, before we move forward, are there any questions about the US dollar Japanese yen? Going once, going twice, going 3 times. Okay, well, I guess there aren't any questions about the US dollar Japanese yen. Are there any questions about trading in general? Do you guys have any questions you want to ask us? Because we want to provide a little bit of time just to answer any of your questions, any of your concerns about trading in particular. But this could be your time to ask whatever question that you may have. And even as far as trading, like what instruments do we trade or whatever. But this could be that time to ask whatever you want. But if you guys don't have any questions, then that's okay. I know for us, what we're going to do is continue to provide more technical trade ideas for our private members. They receive trade ideas in multiple different pairs. I think before today, actually, it was actually 9 for 11. We had 9 winners and only 2 losers. So then we've been on a good winning streak for a while. Just for this month of February, it's been good. And we were at an 82% winning percentage or win rate on our trades. But right now, we're actually at around 70%. We actually had 2 losers. We had the Euro USD that lost. That's one. And then we had our US Swiss franc trade that lost as well. So then we had 2 losers. That put us back down to around 70% win rate, which is still good. It's still above average, because I think a lot of traders don't know this, but most professional traders have an average winning percentage of 30 to 40%, which means they don't win all the time. The reason why they make a lot of money is because they know the power of the reward to risk ratio, or the R multiple. And I know I wrote about that plenty of times in the various emails that you guys were sent. But if you want to, you can refer back to those emails. But that's really what trading is all about. It's all about understanding the R multiple, or this whole ideal of reward to risk ratio. But we want to give you a bunch of good trading ideas. We want to give you high probability trading ideas that can help you grow your account. Like, we've been on a good track record for a while now. And oftentimes you may need that extra help in order to get over that trading slump. And we want to help you guys out. And that's why we want to, of course, introduce you guys to the private group. For those that are familiar, this is our lab private trading community. And our next webinar, for those that want to know, our next webinar for the premium group will be tomorrow. It's on Wednesday. We typically have webinars on Mondays, Wednesdays, and Friday.
During the Asian trading session.
Yeah, but yeah, that's when we're going to have our webinar, during the Asian trading session. So then if you're interested in coming, please do come and please join. We still have the $1 trial open. So then if you are interested, you can definitely take that trial. We have a number of different features that we offer, especially this Grand Slam trading opportunity, which is really something that's spectacular. You know, for those that are interested, just go and take this, look at this report. You will have access to it right after your 14-day trial. Yeah, because it's too valuable. We just can't give that to anyone that pays $1. It's just too important, too valuable for us to give away. But these are the different sections, you know, of our private trading community. We have our monthly training videos, our potential trade setups. Most of our trade ideas will be sent to our private Telegram group. So then that's why we recommend, like, for everyone that joins, make sure you join our private Telegram group, because for, you know, that's where you're going to receive the most signals. You know, we don't really post everything back here, but we post everything definitely in our private Telegram channel. But our webinar recordings are here, weekly Outlook videos here, which is really good. And then we have everything else right here below. But yeah, if you guys have any questions about our private trading community, just let us know. You can easily join for $1 just to test us out. But with that said, I guess that's it. I don't want to hold you guys hostage for too long. Yeah, I think Marvin, he had something he wanted to share.
Well, yeah, I just kind of figured since we got time, we can probably just go over the economic calendar for today. And you can see here how we don't have too much primary or first tier data coming out for either the U.S. or the European economies. Right now, you know, of course, we have the ZEW Economic Sentiment surveys that show that the European economy is still under distress. Even though it came out better than forecast, there's still distress there. And this is just a picture of the economic health of the Eurozone. But for the most part, we don't have any first tier economic indicators that are coming out. So then, yeah, like right now, really, to be honest with you, investors and traders are just waiting to see what the FOMC meeting minutes will indicate on tomorrow. On Wednesday, we'll receive the meeting minutes from earlier this month with the Fed monetary policy statement from earlier this month. And in these meeting minutes, we'll be looking for clues or just any indication of what the Fed considers to do with their rate hike cycle, whether they feel like they're towards the end of their rate hike cycle, or is there further room for more additional rate hikes through the year. But then that's where we're going to be looking. We're going to be paying close attention to those minutes because that would give us some further direction on the greenback or the dollar, and even also impact other markets as well. So then that's pretty much it for now. I don't really have much to share for today. Right now, of course, we may see a return of volatility since U.S. traders are now coming back on the scene after yesterday's President's Day, which was a holiday, a banking holiday. Well, you know, a trading holiday, you can say, for the Americans, for the United States. So then we may see a return of normal liquidity as usual, which may provide opportunity or provide you know, more opportunities for trade setups. But we may see that take place. But I don't really have much else to share since we don't have any questions. But one thing we want to do, we want to thank you guys for joining us for today's Technical Tuesday session. This will be recorded and sent to you. And if you guys have any questions, you can contact us on our customer support form on the website, or, you know, you can send us an email. You can reply back to any of the emails that you receive from us. But I don't have anything else to say. I'm going to turn the mic back over to Melvin and see if he has anything he wants to add.
No, I'm good. I'm good. I don't have too much to share with you guys. Yeah, just know that if you guys have any questions about anything, you can contact us via support, even if you couldn't ask your question on this live session, because we really want to help you guys. Of course, we want to provide this thing for free members, just to give them a taste of what we provide in our premium trading community. But this is just a taste. It's not the whole meal. But if you guys want the whole meal, you can definitely take up that offer for $1 and then take advantage of some of the information that we're sharing in our private trading community. But with that said, thank you guys so much for coming. We really appreciate you guys. And we'll definitely see you guys next week on Tuesday, on our next Technical Tuesday session. Hopefully, we get price to do exactly what we're thinking or expecting it to do. So then we'll keep you guys aware of what happens. Like, I know some of you guys are a part of our private Telegram channel on our free Telegram channel, which is public. So then we'll definitely notify you if we do decide to trade the Euro USD or the US dollar Japanese yen. Yeah, we'll definitely let you guys know. But with that said, thank you guys so much for coming. We really appreciate you guys. And yeah, we'll talk to you guys next week. All right. Talk to you guys later.